International alarm after the Trump administration announces the first ever criminal investigation into the head of the US Federal Reserve. Jerome Powell says the probe is politically motivated. So why is this case causing so much concern worldwide? This is Inside Story. Hello, welcome to the program. I'm Adrian Finighan. A row at the top of US politics and the US Federal Reserve might seem remote to people busy with their own lives across the world. And if that's your view, you should maybe think again. A criminal investigation into the chair of the Fed, Jerome Powell, by the Justice Department of US President Donald Trump could have implications well beyond the US. That could perhaps explain the swift and sharp response from central banks across the world. A joint statement voicing solidarity with Powell. Such a letter is as unprecedented as the reason it was written, the first ever criminal probe into a Federal Reserve chair. Investigators are examining evidence that Powell gave to Congress about the $2.5 billion renovation of the Fed's HQ. But many believe the criminal investigation's been launched for other reasons. We'll talk to our guests shortly to find out why and to explain how this might matter to you wherever you are in the world. But first, a report into the week's extraordinary developments from Fintan Monaghan.
The chairman of the Federal Reserve is in the crosshairs of the US Justice Department. But Jerome Powell has pushed back, accusing the Trump administration of a politically motivated campaign against him.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
Trump denies knowledge of the criminal probe, which is linked to the high costs of rebuilding the Fed's Washington, D.C. headquarters. But the two have been at odds over interest rates for much of the past year. Trump wants cuts. That might give the economy a short-term boost by bringing down the cost of borrowing money. But Powell's resisted because it could cause inflation. Just 2 weeks ago, Trump made this public threat.
We're thinking about bringing a gross incompetence, what's called gross incompetence lawsuit. It's gross incompetence against Powell.
There were several cuts in 2025, but Trump says there's room for much more.
The inflation numbers just came out, and we have very low inflation. So that would give too late Powell the chance to give us a nice, beautiful, big rate cut, which would be great for the country.
Heads of major central banks around the world, including Christine Lagarde, have voiced support for Powell and the independence of the Fed. Central banks have traditionally operated separately from the central government. That keeps long-term decisions on the health of the economy separate from short-term political interests. Even the German Chancellor has warned against possible systemic risks to the international economy.
I hope that there'll continue to be a broad consensus in America that central bank must remain independent, also in the USA, because independent central banks are also a guarantee that a currency can remain stable in the long term.
Powell's term as chair runs until May. Then Donald Trump will be able to nominate someone he wants in the top job. Until then, their feud over interest rates and the Fed's independence is likely to rage on. Fintan Monaghan, Al Jazeera for Inside Story.
Let's bring in our guests. Eric Ham is in Washington, D.C. He's a political analyst and former US Congressional staffer. Joining us from London, Justin Urquhart-Stewart, who's an investment manager and co-founder of Regionally, an online investment service. And also with us is David McWilliams, an economist, author and podcast host. He's in Dublin. Welcome to you all, gentlemen. Eric, let's start with you. When central bankers around the world feel compelled to publicly defend the independence of the US Federal Reserve, that suggests that this is no longer just a Washington political spat. Let's start simply here. What exactly is at stake? Why should people outside the United States care about this?
Because right now it is the U.S. monetary system that is on the line, and when you have the president of the United States and his Justice Department bringing a criminal investigation against the chairman of the Federal Reserve, it is a massive, massive blow to the independence of the agency. And it is that independence which actually makes the Fed so attractive to international investors. And also, given the fact that the U.S. dollar is still seen as the dollar of note for the world, and the fact that now it is in jeopardy, this is putting billions and, of course, many investors in grave concern. And right now there is any question as to what will happen and how far, importantly, President Trump is willing to go, not only to oust the chairman of the Federal Reserve, but also to take control of that very independence, which has actually fueled the United States monetary growth.
Justin, the Fed rarely speaks outside its regular schedule. When its chair feels compelled to address the public directly at short notice and at the weekend, what message does that send to markets, and how seriously do investors take it?
Well, markets take it with great concern. Remember, there's one vital word that all central bankers have to make sure they give out, and that is confidence. Confidence that they have some idea of what's happening in their economy and the global economy. And of course, in the case of the Fed, even more important, because you're just hearing, because the strength of, obviously, the American economy, the global strength and impact, and therefore, whatever happens in the US Fed will actually ripple around the world. This is the first time, though, I've actually seen central bankers almost getting together as an international trade union to try and support each other. It is really quite remarkable, but worrying on the basis that, well, you're seeing political interference.
David, what's your take on this? Economists often point out that political interference in monetary policy is something you'd see more often perhaps in countries with much weaker institutions than the US. I mean, what's going to happen if that line is crossed in the US? Why does it matter if it happens in the world's biggest economy?
Well, Adrian, I'm speaking to you as a former central bank economist, so I've been involved in this game for quite some time. And as you point out, it's typically economies that are much less well run than the United States get involved in this sort of stuff. I mean, authoritarian leaders from Nero to Lenin, from Hitler to Henry VIII, have always tried to interfere with who prints the money, who gets to print the money, and at what price. Now, if you really look at this particular issue, it's all about who gets to set the growth rate of the American economy. Is it the Federal Reserve or is it the president? This is, in effect, what's going on. Typically, it is the Federal Reserve that gets to set the growth rate. It says the growth rate, consistent with the low rate of inflation, is going to be X, and we are going to derive our monetary policy and our rate of interest according to that. So in effect, if you look at politicians are always wanting to push their foot down on the accelerator. More growth, more election success, more people feeling good in the very short term. Central bankers push their foot down on the brakes, which is, hold on a second, let's raise the rate of interest. Why? Because we're worried about the rate of inflation. So it's about the interplay of these two things, the brakes, the accelerator in the economy. And up until now, as Justin said, and as Eric said, the world has always thought, okay, the central bankers are the people who get to set the growth rate of the economy because they're concerned about the long-term rate of inflation. Politicians are not concerned about the long-term rate of inflation, and as a consequence, they want things to accelerate quicker. And that's what we're looking at. And the reason it makes a massive difference is the rate of inflation, which affects poor people worse than rich people, will go up. The long-term rate of interest, which affects your mortgage rate, your 30-year rate, will go up. And I think for the world in general, the idea that the people who actually manage and preserve the integrity of the US dollar are no longer concerned about the integrity of the dollar and much more concerned about short-term politics, that will scare people, not just on the high street, but also in financial markets.
Eric, why does the president, let's put it kindly, a moderately successful businessman, why does the president think he knows better than the Fed? From a political perspective, what does Trump gain here? If rates fall, okay, there might be a short-term boost in the economy, but it could end up weakening US economic power and investor confidence rather than strengthening it. I mean, why is he gambling this way?
Well, there's a couple of reasons why we're seeing the president do this. One is about sheer power. The president has already put his thumb on every agency in the government, from its defense to, of course, its justice system. And we're seeing that play out right now, particularly in the justice system, because now you've got this criminal investigation against the Federal Reserve chairman, which is unprecedented in the United States. Secondly, as we heard from the previous guest, the president wants to be able to shape the economy, and at least in the short term, it will give him a massive political boost. Right now, the American people are deeply concerned with rising interest rates. They're concerned with the high price of products right now. Now, of course, much of this is due to the tariffs that the president has implemented on goods and services coming into the United States. But nevertheless, what we're seeing here is the president believes that by lowering interest rates, that will give the economy a much needed boost, and of course will give his political party a jolt that they certainly need, particularly in an election year where right now it appears as though the president and the president's party could lose power.
Justin, do you see any serious economic argument behind Trump's demands for faster and further rate cuts? Is this mainly, do you think, about short-term political advantage? We spoke a few moments ago about market reaction. They haven't reacted perhaps as violently as they sometimes do with political shocks. Is that because investors believe the system's going to hold, or because they're perhaps underestimating at the moment how far this could go?
I think they're very bemused at the moment, actually, what might happen. They're very concerned. After all, you see what's happened with the president. He's not exactly someone who's always very familiar with the truth. And, of course, he is an expert in absolutely everything, as we know. So it's hardly surprising, I think, that his ego is taking over here. After all, the other things he's been influenced around the world, why not, obviously, are his own issues over interest rates. Now, I'm afraid, as we've already been saying, this is a short-term issue, political issue, and an ego issue. Now, put that against central bankers, who are supposed to be delightfully dull people, because they're supposed to be keeping things steady and let them carry on in a reasonable manner. Don't push too far too fast. Don't risk the economy. And yes, they'll make mistakes from time to time, but it's a slow and steady case. What you're not doing is trying to get someone coming in with short-term views and ideas with a concept that, well, if I just press this button, it'll go a bit faster. Be very careful. If you don't know what effect these buttons can have, and even the experts don't always know, you're actually in a very dangerous situation, not just the American economy, but for the global economy, given all the political issues with it as well. Markets are nervous at the moment. You want a good indication of that? Not so much the bond markets. Just look at the price of silver and gold. That's a good enough indicator for me.
David, I mean, you touched on it a few moments ago. What does all of this mean for the likes of you and me?
Well, the first thing it means is that the central bankers are charged with, and sometimes, as Justin said, dully obsessed by the rate of inflation. And the rate of inflation is, in effect, the value of your weekly take-home pay. And if the rate of inflation goes up, it means the value of your weekly take-home pay goes down. That's the first thing. So you should be worried about that. The second thing is, of course, what they call distribution effects. Who pays most? Now, what you find is that when the rate of inflation goes up, poor people pay more than rich people. Why? Because a much higher percentage of a poor person's income is going to be going on basics like food, like energy, these sort of things. Whereas if you're a multimillionaire, it's only a tiny fraction of your weekly or monthly income goes on, for example, utilities or food. So what you see is two things. One is everybody's affected badly, but two is the poor are affected worse. And then the final point for anybody who has a mortgage is that in the United States, the mortgage takes its lien from the 30-year Treasury rate. So if long-term interest rates go up, and the reason they would go up is because they are predicting future, not short-term, but future inflation, then of course the increase in those rates goes straight into the back pocket of anybody who has a mortgage. So all told, what you find is the squeeze will come from the monetary side, inflation and interest rates. And I think maybe the one reason that Donald Trump is so keen to reduce interest rates is that he is an endemic debtor. Now, there's always a split in the world between creditors, those people who lend money, and debtors, those people who borrow money. As a general rule, those people who borrow money want the cost of borrowing to be as low as possible. And if you have spent your lifetime defaulting, borrowing, defaulting again, then your general DNA will be biased towards lower, not higher interest rates. But the interest rate is crucial because who rewards the saver from lending to the borrower if the rate of interest is artificially low? So what you can see is there's all sorts of people. So people listening to the show might think, it's American interest rates, it's very far away. Are you a saver? Yes, then watch out. Are you a mortgage holder? Yes, watch out. Are you a punter taking home a weekly wage? Yes, watch out. So this is how top-down economics percolates, and in my opinion, quite quickly down onto the street.
Eric, this feels much, much bigger than an argument about who gets to control the setting of interest rates. To what extent is this actually about institutional power and the presidency? Is what we're seeing right now really about bringing historically independent institutions, the central bank, the statistics agency, even law enforcement, more directly under presidential control? And what, if that is the case, what does that mean for traditional Republican thinking? What will voters in the US make of that?
Well, already we're seeing that clearly the decision to actually bring this criminal probe into the chairman of the Federal Reserve has had negative consequences for the president and for his political standing. And more importantly, it's done so even within his own party. You're already beginning to see Republican senators who are now pushing back, some even going so far as to say they will not actually support or get behind the appointment of a new Federal Reserve chairman unless or until this matter is resolved. And I think it goes back to something also we cannot negate that David said that I think is so very important. President Donald Trump has been a long-time debtor in terms of the way he has used it and the way he has been able to finagle and shape his debt actually to his benefit. And so he's bringing a lot of those ideas into public policy. And while that certainly may have been a benefit to him personally, that certainly is not, I think, productive for the national or even the global economy. And that's what we're seeing in terms of how Donald Trump is not only attempting to try to govern monetary policy, but it's also, I think, shaping how he sees and views the justice system, how he sees and is attempting to shape military policy. And also, I think it's how he's shaping the government itself. He's trying to basically turn and morph the U.S. government into the Trump organization. And when you're talking about an organization that has seen a number of financial calamities, that is not how the government should be operating. And that is why the world is reacting in a very negative light to what they're seeing play out.
Yeah, Justin, as we heard in Finton's report, we've seen public backing for Powell from other central banks, including the Bank of England in London, where you are, the ECB in Brussels. How rare is that kind of global solidarity? What message is it sending? And is President Trump likely to take any notice?
Well, privately, of course, we would never get to hear of the coordination between the central bankers. But of course, it goes on. They talk to one another and make sure they coordinate where they can, where it's beneficial to do so. But to actually come up publicly like this, I've never seen something like this together, where you actually have this sort of everyone signing a letter to put in their views, almost like the trade union of central bankers. So it is very strange. And what impact does this actually have? Well, the issue is one of concern over what happens in the future. How are they going to be able to maintain independence? Will other governments saying, well, if Trump can do it, I can do the same? In Britain, of course, for many years, we had the Bank of England effectively not making interest rate decisions. It was the Treasury. Some, being cynical, would say to an extent that still carries on. But in theory, at the moment, it's separated out. And one of the great things about the American economy and its constitution is they deliberately separated out areas of power so that one particular person couldn't control everything. What Trump was doing in his first term, and I think felt so frustrated by, was what he found he couldn't do. He's now actually taking advantage of in his second term and seeing what he can control and how far his powers can go. The next stage of that is he going to go for a third term? In theory, no. But with this president, we have no idea.
David, as we heard in Finton's report, Jerome Powell's term ends in May. Trump has made it clear that he wants a future Fed chair who will cut rates aggressively. I mean, how much does it matter who replaces Powell versus the strength of the institution itself?
Oh, well, that's, again, a very good question. Is the institution stronger than the personalities? I mean, I think what we're talking about is a power grab. And we know that there is nobody more powerful in society than the person who controls the money. Money is the glue that gels society together. It is an awesome weapon on the part of governments, which is why I suspect central banks have been independent for so long. I mean, we've largely seen a revolution in central banking from the 1970s. By the 1990s, with the exception of the UK, as Justin said, most central banks were independent. And then I think the late 90s, the UK stepped in line with most other countries. And the reason is very simple. This is about power. And this is about the exercising of power. And I would say that the money is a far more powerful tool than ideology, than even warfare, than certainly all sorts of other weapons that are in the hands of presidents. So what we're seeing here is a man who doesn't really understand or isn't bound by or perceives himself not to be bound by the rules of the game. So he's tearing up the rules as we go along. This one is a particularly acute tearing up. Why? Because he's actually affecting financial markets, corporate America's interests, Wall Street's interests, so there may well be a massive pushback. But to answer your question, if there is a patsy at the helm of the Fed, it will undermine the credibility of the United States dollar at a time when the United States dollar is under credible threat. The United States is no longer the overwhelmingly dominant economy in the world. It is technically number one, but it is being gradually dragged back downwards, by China, and of course, in the long term, by other countries as other countries grow. So I think President Trump probably doesn't understand the exorbitant privilege that the United States has as being the reserve currency of the world. There is nothing more powerful than the fact that you can print the money for free as the reserve currency, and people have to give you real stuff to buy that currency that you print for free. How amazing a deal is this? And for the Americans to self-sabotage from the White House seems to me to be the politics of idiocy.
Eric, in the US itself, how much public understanding is there or concern over Fed independence? Or is the media there somehow framing this as purely another political fight? It's just Trump being Trump.
Well, I think two things can be true. This is Trump being Trump, but also the media and the press itself recognizes just how important this fight is. And they have to reckon with it simply because we have seen the outcry not only from lawmakers, but also from other global Federal Reserves as well. And when you look at what's taking place, and Justin hit on something very important, because we have seen the BRICS nations also try to establish their own currency. And when now you have the United States under a president who is attempting to try to control the U.S. monetary policy, this is going to, I think, spark other nations, other interests to begin to look elsewhere if they do not see or if they believe that the United States dollar simply is no longer a valuable currency. And the president, once again, is jeopardizing that and putting that in serious making it a serious issue and creating vulnerabilities where simply there should not be. But never, and that is why I think the press has no choice but to recognize that what we're seeing here is a five-alarm fire playing out.
Justin, looking ahead, if this confrontation continues, what are the early warning signs that me and anyone else watching or listening to this program that we should perhaps watch out for? The signals that this has tipped from just political noise into something that could become a genuine economic danger.
Well, first of all, start looking at actually what the Fed would do, given against what it said it's going to do. It always tries to give an indication in advance of the directions they're heading. And if we're suddenly seeing, hang on, that's different from what we were hearing before, does that mean political interference is actually having an effect? And if the market thinks that maybe interest rate cuts are going too quickly and there is inflation there, then you'll start seeing markets react really quite quickly. You'll see some of those bond prices move, and you'll see people have that fear that they lose that confidence in the economy. And remember, particularly in American economy is based on the consumer. It's a consumer society. And if you start impacting then on the cost of debt and also house prices, you can see what impact that has really very quickly in an economy. And you lose that vital word of confidence. So look for areas where you're seeing really almost irrational decisions being made, which are going against the trend. That's what you need to be looking for. That's what we don't want to be seeing. But hopefully, therefore, we're going to see some common sense prevail that actually, of course, the Fed is a committee of regional Feds and other leaders coming together to come together with that consensus and actually push back against short-term political ideology, which is what they're seeing at the moment. It is a very dangerous situation to be dealing with.
David, I've got about a minute left on the programme. Do you want to add to what Justin was saying there?
I would like your viewers to just remind themselves that the key word here is trust. What keeps money sacred, almost has an alchemic value, is trust. I trust it, you trust it, we trust each other. Now, if you chip away at that trust, which is ephemeral, it's entirely in our heads, you begin to chip away at the very foundations of the system that we all have a vested interest in that system remaining stable. So once you put the trust in the currency in the hands of somebody who is untrustworthy, you begin to open all sorts of dilemmas about what's the value of money, who prints it, can it buy what it says it buys, and can I save in it? These are massive, massive issues.
Gentlemen, there we must end it. Many thanks indeed to Eric Ham, Justin Urquhart-Stewart and David McWilliams. And thanks for watching. You can see the programme again at any time by going to the website. That's at aljazeera.com. For further discussion, you can join us on our Facebook page at facebook.com/AJ Inside Story. And of course, you can always join the conversation on X. Our handle there at AJ Inside Story. From me, Adrian Finighan, and the team here in Doha. Thanks for watching. We'll see you again. Bye for now.